Okay, on 31 December 2013, Lag Limited acquired a share in Regkry Limited at a value of R475,000. The following is condensed published financial statements for the year ended 31 December 2013, which Regkry Limited provided to Lag. Lag provided the financial statements in conjunction with financial statements of Regkry for the purposes of the consolidation of the Lag Limited Group. Statement of financial position as of 31 December 2013, there's Lag, there's Regkry. And the assets consist out of property for both of them, plant, costs and accumulated depreciation for both of them, vehicles, costs and accumulated depreciation for both of them. The investment in Regkry is 140,000 shares, which costed R475,000. Now, if we look at the issued share capital of Regkry, the total amount is 400,000 and it was R2 shares. So that means that there was issued 200,000 shares. So if we look at this one, we said, well, they've acquired then 140 of 200,000 shares. And if we work out that percentage interest, it gives you a 70% interest. So therefore, there is NCI, so non-controlling interest of 30%. Good. Both of them had inventory, both of them had a bank balance, both of them had debtors. If we further look at the equity of Lag and Regkry, ordinary share capital, retained earnings, revaluation surplus, non-current liabilities, debentures, current liabilities, equity. Now, we know that Lag has acquired 70% of the equity of Regkry. And we know that the first step in consolidation up to now was to do an analysis of the equity of Regkry, the subsidiary. So if I add all those amounts together, the 400,000 plus the 99,100 plus the 50,000, it gives us a total of 549,100. So it means that Lag has acquired 70% of that. So if we take that amount multiplied by 70%, that equals a total of 384,370. Just make that one a little bit bigger. 384,370. And it means that the non-controlling interest is the 30%. So this one there, let's call it Lag, and this one here we call NCI, non-controlling interest. So 30% of that equals then a total of 164,730. Good. Now, how much did Lag pay for equity, which is worth 384,370? Now, if we go and have a look, they have paid 475,000 Rand for that investment. So obviously, they paid more for that investment than the underlying equity value. So what is then the difference? The difference is 90,630, and that 90,630 equals goodwill. Why goodwill? Because they paid more than the underlying equity value of 90,630 Rand. Okay. NCI 164,730, so we cannot forget that. So the 164 plus the 384 will give us total equity of 549. If we want to prove this goodwill amount, what are we going to do? Well, we're going to take the investment, the consideration paid of 475,000. We are going to have a look what is the net asset value of this entity that they have invested in. Total assets 105,450. Total liabilities is the 475,350 plus the 26,000, which gives us in total 510,350. So if we want to see what is the net assets, the net identifiable assets, it's the total assets of 1050 less the liabilities, which is the 475 and the 26, which is 549, and that will equals then a net asset value of 549,100. So they paid 475,000. The non-controlling interest, I cannot leave them out of the equation because they only bought this consideration paid was only paid for, what is the interest? Only for 70% of the value of the entity. The non-controlling interest, what is that? That is the other 30%. So if we talk net asset value as we have it here equals 100% of the total entity. So therefore we cannot omit the 70% or the 30%. We have to do the 70, the 30 and the 100 because 70 plus 30 will make up the 100% that we have there. Good, so we said the net asset value was 549,100. We said the consideration paid was 475. We said that the non-controlling interest was the 164,730. There we've worked it out, 164,730. 164,730. And then if we're going to do a simple calculation, we say, well, our share and the outside shareholder share equals a total of 639,730. The underlying assets, as on the statement of financial position, net assets, is only 549,100. So those two are obviously more than the underlying assets. So therefore, the total goodwill is 90,630. If we want to pass the pro forma journals, what did we say do we have to eliminate in the pro forma journals? We have to eliminate number one, this investment of 475,000, and we have to eliminate number two, the equity of Lag Eng as at the date of acquisition, which are those. How are we going to eliminate the investment? Investment is an asset, so if we want to take it out of the books, we have to credit that investment. Equity, on the other hand, are all credit balances, so if we want to eliminate that, we have to debit those accounts. So if we go to the pro forma journal, we are going to debit share capital of Lag Eng with the 400,000 to take the total capital out. We're going to take out the total retained income, which is 99,100. We're going to take out the revaluation reserve of 50,000, and this is all in Lag Eng's books. In the investment in Lag Eng, that is in Lag's books, so we're going to credit that by 475,000. But now remember, the 475,000 only equals 70% of the total value of the entity. So the other 30% we also have to account now for the first time, and that is our non-controlling interest. It's also non-controlling interest 164,730, and we've also worked that out here on the statement of financial position 164,730. And then the balancing figure of this whole journal entry, in order to make it balanced, you will see you need a debit on that side, and that debit is then our goodwill, 90,630, and that is the same 90,630 that we've actually proved there, and we have also proved that by this computation, not that one there. There we've also proved that 90,630. So the goodwill amount is 100% correct. Good. What is our next step then? We have done our pro forma journals, we've done the equity analysis, we've done the pro forma journals, we've done the proof of goodwill. Then we're going to do our consolidation worksheet. Now we said in our consolidation worksheet that the first columns is going to be exactly a copy and paste of the financial statements of Lag Eng and Lag Eng. So I'm going to copy and paste this portion, which is my financial statements, and that's going to make up my first three columns, my description, my holding company, and my parent company in my worksheet. So there's my description, and there I've copy and pasted all the figures as is in my books. My consolidation adjustments that I want to pass equals my pro forma journals. So what did we do with our pro forma journals? Well, the first thing we took out our investment. So there it is. On the credit side, we took out the investment. Nothing stays behind. A debit and a credit equals cancel each other out. The next thing that we have done is, on the asset side, we have created a new asset called goodwill. Now, goodwill is an intangible asset, but that's also a non-current asset. So goodwill, there's our debit entry of 90,630. Then we've taken out the share capital and the equity of Lag Eng. And that is those three entries that we're going to post here against their capital account. What we have created is our non-controlling interest of 164,730, 164,730. Now we can consolidate. So our last column on our worksheet is our consolidated figures. Our assets we're only going to add together. Guys, it doesn't matter that Lag Eng only acquired 70% of Lag Eng. When we consolidate 100% of assets, 100% of liabilities. So that's going to be 1706. The same is going to apply to plant. The cost is 800,000. I'm going to add the accumulated depreciation together. That's 400,000. Vehicles, the cost is R1,000,000. I'm going to add the accumulated depreciation together, 487,500. Good. So those consolidated figures, I'm going to add, because I only have a one line item in the statement of financial position, property, plant and equipment. So therefore I'm going to add everything in that block together. That is my property, plant and equipment. And I'm going to put the carrying value, i.e. the net value of that, on the face of my statement of financial position, and that gives me 2,618,500. Now, in our consolidated worksheet, we've also created a new asset, which is goodwill. I cannot add it with property, plant and equipment because this is intangible assets, and that is our 90,630. Our current assets is only going to be a copy and paste exercise. I'm going to copy and paste those total amounts, 150,000, 119,450 and 80,500, and that is going to be here our current assets. There it is, 150, 119 and 80,500. Equity. Now remember our share capital. We've taken out all this, the capital and equity of Lag Eng. So the only things that remain is Lag Eng, the holding company or the parent company. So share capital 500,000, retained earnings 1748 and revaluation surplus of 115. But now we have a new one here, and that is our non-controlling interest, which also form part of equity, which is 164,730. So there's my share capital, retained earnings, revaluation surplus, and the new one, non-controlling interest, 164,730. Our non-current liabilities, well, that is just the copy and paste exercise, 475,350, and our current liabilities are trade creditors of 56,000. And then my consolidated statement of financial position is going to balance with 3,059,080.